are you?
Good. How are you?
Fine, thank you. I have my marketing advisor on the line, Mr. John Bernard, and we're here to talk to you about your initial consultation.
Okay.
Hello, this is John.
Hi, John.
Hey, how are you?
Good. How are you?
Doing well.
I understand you heard about us from the BWI meetup.
Yes.
Okay. Um, all right. How can I help you?
Well, I'm looking at moving to a new CPA. Actually requested information for CPAs on the BWI meetup email,
Mm-hmm.
and multiple people recommended you guys, or you specifically.
Mm-hmm.
So I was looking at somebody who had more of a focus on real estate as opposed to just general business. So
Yeah.
I looked at some of the stuff that I've gotten sent from you through like emails and your website, and it seems like it might be a good fit.
Yeah, we focus on real estate investors. I am an investor myself, and I've been a CPA over 20 years now. Tell me a little bit about what you're doing in real estate, because that would help me determine if there's a fit and how we can possibly move forward.
Okay. I have a rental portfolio. Let's see, we're doing some rehabs. We're going to do some flips. So right now, the rehabs we're doing, we're planning on keeping those as rentals. And then we're managing our own properties. And lastly, we're starting to move into mortgage notes.
Okay. How many rentals do you have right now?
Right now, 10.
Okay.
We're working on 3 properties. Probably going to keep one. I'm not really sure. The numbers work out well to either sell to another investor as a turnkey rental or keep for ourselves. So he's not exactly sure how we're going to work that. And of the 3 we're working on, one of them we want to actually do like a regular flip to a own and occupant.
Okay. Okay, good.
And what, are all of these located in one state, or are they spread out throughout the country?
Yeah, they're all. So my partner and I have 3 entities together, and they're all in Baltimore. I do have an LLC. It's a single person LLC for Pennsylvania. It's where I'm from originally, and there's one property in there. But I started investing in Pennsylvania, and I decided it's not what I wanted to do.
Okay.
So that's just one I own by myself.
Okay. Yeah, it sounds like you're an ideal client. So what I can do is, why don't I go ahead and give you a brief rundown of who we are. Our company's official name is the Wealth Building CPA, and we provide an integrated approach to wealth building, meaning we're not just your average CPA tax preparer that's just a seasonal January through April, and then you don't hear from us again till the following year. We're a year-round CPA firm because we offer different services to real estate investors. The primary one is the preparation of individual and business tax returns. And it's not just about the preparation to keep in compliance, it's making sure that you're getting all the deductions that you deserve as a real estate investor. We also make sure that your returns are prepared in such a way that you're not exposed to an IRS audit. And even if an audit does come up, that we have strong chances because, we advise you through making sure that you have good record keeping. And that the third thing that we focus on is also making sure that you don't have wasted deductions. For an investor such as yourself, because of maybe a repair cost or improvements. A lot of investors think that, oh, I want to be able to claim this all up front, but depending on what's going on your tax return or in future years, we decide that you're much better off maybe amortizing or depreciating those costs in future years so that we don't waste those deductions when you're in a lower tax bracket. So it's not just with tax preparation and compliance and meeting the April 15 deadline, but it's also, making sure that you're getting all the deductions that you deserve. We're taking advantage of all the loopholes and keeping you under the IRS audit radar. And then we also do entity structuring, where we take a look at your real estate strategy, in this case, buy and hold, and then come up with a way to save you on taxes with the entity structure. But in addition to that, also asset protection, making sure that whatever equity that you've built up in the properties, that they're adequately protected with either liens or equity stripping, different strategies like that. So we also
Okay.
set up entities, and we have our operating agreements are real estate focused. And then we also do business meetings, once a year, where we act as your alternative board, like your CEO board for the day, and we go through what your business is doing, how we can improve, and like you said, where you have a decision to make about maybe holding or letting one go. Because I'm an investor myself, we can talk about those strategies and see how it helps, long term in your wealth building. Then we also
Okay.
do financial planning, retirement planning, investment property assistance as well. If you're ever looking for a JV, we have several JVs where we lend money. We also JV on some deals, on some rehab deals, and we're currently looking at a commercial deal right now. So if at any point in time you wanted to join any of our joint venture programs as a member of the wealth building program, you're more than welcome to join us. And it's all investors, for investors, by investors, and we all come together and look for deals that we do together. And then the last aspect is the year-end tax planning, which we're getting ready to do November, December. We're asking clients to send us all their information for the year, because April 15th is really your tax filing deadline, but December 31st is your tax savings deadline. So whatever you don't have in place by December 31st, we're pretty much just reporting. And for that reason, we have most of our clients, our investors, small business owners, send us all their information, what they have to date, year to date, January through October. Send that November, December. We'll run an analysis and see what's going on with your tax picture and come up with ways to save on taxes before the year runs out. So in a nutshell, those are services that we offer to real estate investors.
Okay, that sounds awesome. Sounds really good.
Thank you. Yeah, it's actually a program that was developed by other investors. When I went to the club meeting, and I was, somebody would tell me, can you do my taxes? And I'm like, yes. Can you do entity structure? Yes. And after a while, most of them just said, Ebere, why don't you just come up with one package and we just pay you for the package? So it's actually investors that put the package together, because I told them, tell me exactly what you want. And that's why most investors have found it very attractive, and we're growing really rapidly.
Okay. How many clients do you have?
Right now, I think we're at about 650, and we continue to grow. We've hired more staff. We have a lot more interns, and we continue to grow. My goal is to come to the point where 95% of my clients are real estate investors. I think we're at about 85% right now. Yes.
Now, what about your last previous taxes for the last 3 years? Do you have any concerns with those? Would you want us to review those for you as a part of this as well?
Yeah, I probably want to hurt. Last year was the first year that my partner and I started investing together.
Okay.
So those are obviously the most complicated. Other than that, it wasn't really too complicated for the years from 2013 and prior. It's just my wife and me, and regular earned income. And I did have one entity since 2012, I think. So those ones probably aren't too complicated. But maybe review last year's. Just I think the CPA that I was using was pretty good, but it just, I mean, I don't know any better. But it was just, they were easily, it was easy for me to get a hold of them, but they weren't so much focused on real estate. It was mainly business related. So
okay. Yeah, we get a lot of clients with that, and that's why we have clients from all over the country. We even have some international investors, because it's really important that you work with a CPA who thoroughly understands your business. And most of the strategies that I'm implementing is strategies that I've implemented for myself, because I'm an investor. My primary strategy is buy and hold. And then even before I got into business for myself, I used to work for one of the largest real estate investors in the area. And so these strategies that I implement is what a lot of the ones that have the 100 commercial properties across the DC area, these are the same strategies that they're using at their level. And so I'm able to bring it to the investor who has, a lot smaller portfolio.
Oh, okay. So how easy is it to obtain some type of information? Like if I had a question about something, I just call an email, or how does that work?
Yes, there's you can call to set up an appointment, or you can just send me the question by email, or you can call. If any of my tax accountants are available, they'll answer it. There are just times when we really are locked down and we give priority to people that have taxes to be filed, which is we're coming up on that now, which is the last 2 weeks of first 2 weeks of October and first 2 weeks in April. We give priority to those who have to get their taxes out. But other than that, it's just following the normal schedule where we usually respond within 24 to 48 hours. But if it's something that's a little bit drawn out, let's say we're have to speak with an attorney, or I may need to get on the call with, let's say, your partner, then something needs to be scheduled. It's based on my availability. And my office hours are Monday through Thursday, 10 to 2. We are able to make exceptions outside of those office hours, but usually I use like 2 to 6 to review tax returns, look at entity structures, or address any questions. But if you're a member of the Wealth Building Program, you definitely get priority in terms of the response that you get from us.
Okay. How does the wealth building program work? Like how do we become members?
There's two ways of working with us. The first way is signing up for the overall wealth building program, which is currently at $29.95. If you come as a referral from a referral source, let's say you're a member of like the BWI meetup, you get a $500 discount, so you'll get it at $24.95, and that covers all the services that I just mentioned. The second alternative is to do a pay-as-you-go plan. So if you tell us which specific service you want in the wealth building program, we can offer that as well. But most of our clients, especially for new investors or those who are transitioning, usually just go for the wealth building program because they want to be able to get, the benefit of everything that we offer in the first year and see exactly how we work.
And then that's $2,495, correct?
Yes, and that's for 1 year.
Alrighty. And then obviously that does not include like the tax filing and other
it does.
things, right?
Everything. It includes all of that. It's a one package. Once you pay that price, it covers all of the services, the preparation of your individual and business tax returns. It covers the entity structure, and if we need to restructure an entity, that's covered. Of course, you still have to pay separate attorney fees or the recordation fees if we need to bring an attorney in. It covers the year-end tax plan and the financial plan and the retirement plan, and then unlimited consultations.
Oh, wow. Oh, that's even better than I thought. Okay. Okay. Yeah, I think I'll probably move forward with that because I was actually thinking it was that plus in addition to everything else. So, that sounds pretty good. And I definitely have tons of questions for the future, on how to structure things. So my partner and I have 3 entities together. I can explain why more later, but essentially the reason we decided to do it last year is because we weren't fully aware of all kinds of different opportunities out there. And we had lenders and insurance agents that were telling us that we had to mitigate risk by opening another entity. And then we ended up finding out it wasn't necessarily true. So
yeah, and that's the role that we play because, I am also a real estate investor. When we take a look at the entity structure, there's 2 things that we're looking at is what's your real estate strategy? And then based on your strategy, what kind of what kind of risk exposure do you have, both for taxes and for lawsuits? And then we come up with a structure that fits the strategy. Everybody else, attorneys, are usually just looking at it from one way, asset protection. But if you don't have any assets to protect, why form all these entities? And that's why we see ourselves as a one-stop shop. The other thing that we offer for partners, where if you have another partner, the other partner can actually join you in the wealth building program at 50%. So you guys end up getting a discount because you come together rather than just one person. Because inevitably, what we've seen over the years is that when I'm making recommendations on a partnership, tax return or partnership entity, it's going to affect the other partner. And if I'm not taking a look at what they have individually, I'm just doing whatever works for you. But what works for you may not necessarily work for your partner. And so we strongly encourage that partners, come in together. But there's some people who choose not to. And, some of our clients have come in with their partners and just have them pay the 50% to be part of the program as well. And you guys can decide to just add it all up and split it, in half.
Okay. Yeah, that's something that's talking about. Oh, go ahead, John.
Sorry, I'm just curious. See if we know the CPA you were working with here. Who are you working with? Is it in the Baltimore, D.C. area?
You talking about CPA ones?
Yeah.
No, they were in Lanham. It was Michael K. Shelby or Michael C. Shelby or something.
Okay, that name rings a bell. Yeah, I think that's, yeah.
They just moved to Annapolis.
Okay.
Like a couple months ago. They were good. I mean, like, great people and everything, just not so much of the focus that I wanted. I mean, we got good pointers and stuff, but I was actually looking for something like you were saying, and I apologize. I think, I want to see if I can pronounce your name right. Is it Ebere?
Ebere.
Ebere. Okay,
Yeah.
Ebere, I'm sorry.
That's okay.
Name.
That's okay. I get that a lot. No problem.
So yeah, Ebere, I did want something that was kind of what you have because I wanted to be more proactive instead of pretty much reactive. So I want some type of planning. Right now, we actually are part of a asset protection. We're clients of asset protection. I guess you'd call it program from Laughlin and Associates, and that's mainly for like legal protection. So it's kind of does the same thing, but with like for like the legal portion. And obviously, we were kind of lacking on accounting and whatnot. So like we jumped in and we got started really fast, and then we need to slow down a little bit and make sure all this stuff is in order in case something was to happen. I don't want to, lose my personal residence. Same with my partner. So.
And that's one thing that you would find when you work with us, because we handle everything else for you, we actually would work with the attorneys too, so that it's an integrated approach. Because the other thing that we've seen is most investors, because you have different industry partners to work with, attorneys, closing agents, CPAs, realtors. Usually you have insurance agents. You have everybody giving you advice from a different perspective. Our goal is to bring everybody together and say, hey, we need to work in the best interest of the client. Have you considered A, B, C, D, E? And so most of the time you'll find out that even with the attorney, let's say you guys decided that you do want to continue with the attorneys, we usually would work with them directly so that they're not giving you advice that is counterproductive to everything that we've discussed from the tax side.
Okay. Oh, that's good. And that's all part of the wealth building program?
Yes.
Oh, that's great. Okay. I'm writing that down real quick. So I do have a question. I hope you answer this, but so I had the brokerage account for each of my kids. My kids are 8 and 5, and they had mutual funds and everything. I still have it. But I wanted to, they're not, it's not in retirement fund, but I wanted to take that out and put it into like self-directed IRAs for kids. Does that create a tax burden for me or for them? Or penalties or anything?
Not necessarily, but we do need to discuss self-dealing, making sure that, because since they're direct descendants of yours and you're their parent, we need to be careful in terms of what you can invest in, because you cannot use funds from a direct descendant, and then the other way around, the kids cannot use funds from your IRA for your own personal deal. So let's say if you had a property that you're rehabbing or that you
Mhm.
wanted to rent and hold, and then you're taking money from the kid's account to do that, that's self-dealing. That would be a disqualified transaction. But let's say that you wanted to buy a rental property and everything is going to be handled by the kids, retirement account, and you're just acting like a custodian or an administrator, or you,
Mhm.
bring in your own IRA and you guys invest at the same time. So you're doing it concurrently, not one after the other, then that's not a disqualified transaction. But we can, when we get to that bridge, we discuss all of that to make sure. I'm actually more in favor of a solo 401k than a self-directed IRA. You have more benefits with the solo than with the self-directed IRA. But, once you guys sign up, I can discuss all that with you.
Okay. Yeah, and I just actually found out about the solo 401k, but I have already opened up the IRAs for the kids. So
Yeah.
that's why I just had some friends tell me about it, and yeah, I mean that's fine. We could end up doing both, right?
Yeah, they can always be a conversion or keep it, but it at the end of the day, it's based on earned income. So if
Mhm.
if the kids are not going to have earned income, then we can keep it the way it is. But if we start thinking about maybe hiring them and paying them through the business and all that, then maybe the solo might be a better route to go. Because with the solo, you have a much higher contribution limit. And then if you were to do, if your real estate strategy were to be rentals for their retirement account, there is something called unrelated debt finance income, where if you take out a loan to buy a property with the self-directed IRA funds, there is going to be 35% UBTI tax. But if we were to do the same thing with the solo 401k, because the solo 401k is more of a business retirement account, there is no UBTI tax. So it just depends on what strategy that you want to use for that account.
Okay. Yeah, I'd like to talk more about that in the future. So how do I get signed up?
There's two ways of signing up. If you want to sign up on the phone right now, we can process your information. The second alternative would be that we mail you out the registration form. You can take a look at it. Go to our website. We have more information about the wealth building program. I have a webinar on there as well. You take a look, fill out the form, send it out, and then we can get started.
Okay. Can you guys mail me out that form? And
Okay.
unfortunately, what I have in my partnership agreement is that anything over a certain dollar amount, the partner and I have to agree to it. So, but it's something we've been looking at, so I'm pretty sure I can easily persuade him.
Okay.
So, yeah. Yeah, I'll talk to him a little more. I just want to make sure I got this right. So it would be $24.95, and then 50% of that to bring him in.
Yeah, and I'm sending a note to my accounting department so that that's what they're going to do. They're going to send you the partnership one, since that's what you're leaning more towards. I'll tell them to send you the partnership one, so that you see what's covered in that. It's basically both of you are getting the same thing, but because you have a joint venture or a partnership that you share amongst you, you get a discount on the wealth building program. That's basically what it is.
Okay. And then, Ebere, one more thing I want to ask. You're pretty familiar with mortgage notes too, right?
Mm-hmm.
Okay, because that's like my latest. That's what I want to get into, like really bad. I've been educating myself and going to workshops and stuff. So that's why we formed the third entity, because we don't want to hold any assets other than notes. Just keep it separate. So
yeah, I have a couple of clients who've been reaching out to me on that. And I told them that, because what happens is, depending on demand, that's when we form a JV. So once you guys, if you join the program and you decide that you do want to go into notes, and then it's something that maybe you wanted to bring in other partners, we can help you set up that joint venture and have other investors who are also interested in notes. We'll have our investment property analyst, kind of vet you guys, make sure everything checks out. And you guys can be the lead investors, with the notes JV.
Oh, okay, cool. All right.
All
Yeah,
right.
I look forward to doing this. I like what you were offering.
Thank you. So we'll go ahead and send you out this information. You get it either this evening or first thing tomorrow morning. And then
Okay.
hopefully, we'll get the registration form back. Otherwise, we'll have maybe John follow up with you maybe in about a week or so to, confirm if everything is still okay.
Okay. Sounds good.
All right, Chris. Well, thank you. Yeah, we look forward to working with you, man.
Yeah. Same here. Thanks, John.
All right. Take care. Have a good day.
All right. You too. Thank you.
Bye-bye.
Bye.